block. There's your market structure shift. Same thing, concepts. Have to understand price action, right, Chosen? So looking at this, you can go to 1 minute. Fair value gap. This is where the rest of the internal liquidity is. Price will run to this internal liquidity. And then we could have, I would have probably taken partials here and then target this high right here. Okay. Once again, price is respecting it again. We can always get some sort of manipulation, so keep that in mind. Price is respecting bullish PDRAs. And then this would have been the model, the external model here. I'll have taken partials here, and I'll be looking to run more contracts to this high right here. This would have been my buy side of the curve. Now that I'm not in this trade, let's say if you're not in this trade right now, I'll wait for a run stop to internal liquidity. Where is my internal liquidity? Well, internal liquidity would be here and here. So if price runs to this internal liquidity, maybe we run to these order blocks, or if we run to this insufficiency here, if we get some sort of run before sweep in this area, this would be a turtle soup setup. We now have confirmation that we're bullish is bias, and now we're waiting. If we didn't get in at the time we should have gotten entered at, then we wait for a run stop to internal liquidity, and then wait for that to now change character. Then we can go ahead and target that external buy side. Okay. I'm probably going to see Cameron all the way to that buy side liquidity though. Hey, how you doing, Chandler?
Hey, I'm here to let you go. That's I'm setting you free.
Just send me home. All right.
But we appreciate you coming on, and we'll definitely be asking you to come back. And guys, I've been putting Cameron. He's with Traders Network Club. Links in the chat. It takes 2 seconds, maybe not even that, to click on the link, subscribe, and then you get more of Cameron. But Cameron, thanks for coming on.
All right, appreciate it, man. Appreciate having me. I'm always happy to be here. So anytime, man. Appreciate it, Chandler.
All right. Well, we'll see you next time. And guys, we're going to move the show right along to Chris Pulver. So stick around. Chris Pulver right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What's happening, everybody? How we doing? I'm just getting my update here for Nike. Nike was entered in at a 560 debit. I talked about doing that trade yesterday, so I did. I posted that in the Discord section for my Chris's Trades, Pulver Alerts. Entry was 560 debit, closed for $6.75 or better. And that's about a 20% return on capital. So that trade is done. I want to show that trade right here. So Nike, we're trading at 82.71. We have a little bit of an indecision on the day. When I closed the trade out, we were, let me move this over just a tiny bit right there. So as price was pushing down near 81 and change, I did get that trade to close out. I can show you that right in here. So if I go to Nike, you can see here trade was taken. Let me go to this account, Nike 670. If I go to the order history, let's see here, Nike. That's so weird. Oh, I need to go, really? Like the last 7 days? There we go. I don't know. It's not showing the debit in here, but it was a 560 debit. Let me see if it shows it in another account. 670, 669. That's so weird. Here we go. Here's okay. So I took the trade. It was 567, 568 debit. Closed it out this morning. 669, 665, 670, 675. I think 680 was my best fill this morning on one of my accounts. So anyway, Nike's closed. I updated here in my trade section. So under the stock option trades for my Pulver alerts, update right here. Entry is 560 debit, close 675 or better, but a 20% return on capital. And there was a trade that I posted with the earnings report. I want to see what it's trading for right now, just in case if we're looking at it fresh, what would this trade be looking for right now? If I go similar order, it's profitable, not as much. And again, I would say at least consider a break even or better. I would consider a break even or better. I mean, otherwise you're going to have to wait for price did what it was supposed to do, right? I mean, we had a center price around 89. We moved all the way down to about 81.79. Let's do the math on that. So let's say our center price around $89. $89 and current price is 82.86 was about a $6 move. We were looking at about an $8 move based on our expected, market maker move and implied volatility plus previous earnings reports. So anyway, that was Nike. So I'm out of the trade. Grabbed about 20% return on capital, not too shabby. I have a couple trades still going on the SPX this morning. Price is cooperating. I want to take a quick peek at those. Go to the broker platform, go to SPX. So this account right here, right now, let me check these. 350 trading for 325, 365 trading for 380. Just going to keep monitoring those for the morning. This one's looking pretty good for a profit, hopefully coming in soon. This one, same thing here, need a little bit more time decay. So I'll keep an eye on this one. Price action wise today, we came up to have a gap fill. So we pushed down towards yesterday's lows. We just kind of poked yesterday's lows, came back up off these gamma squeeze levels, filled today's gap. And I'm looking to see if price will just kind of hang out in here. So pushing down, pulling back to the gap fill. Let's see if price just kind of stays here, or if there is some type of like aggressive movement where maybe we retest the lows again and it just becomes a little choppy. So I'm looking to keep an eye on the SPX this morning and see if we get back into 56.95, 56.90. I should have a couple more trades closing out for profit on the SPX. So I do have those already running. I'm just going to kind of keep spot checking these as the morning unfolds. So I will watch that. Hopefully in the next 30, 35 minutes as we're together, I get a couple more wins on SPX. I did want to take a look at Boeing today. So let's go to this account. Let's go this workspace. Boeing's trading at 153. And I'm going to see if I could take some shares of Boeing. Number one, not take any shares. I don't want to necessarily own the shares because I don't really want to allocate, $12,000 to $15,000 of buying shares. But if I take a look at the weekly chart, I mean, Boeing, COVID, we had a huge crash, obviously. Boeing was down about 79 to 80% on the COVID crash from high to low. We're still, into those COVID levels. Not $91, but I mean, we've got some really strong support here around like the 120 zone. And I'm thinking that with the hopefully implied volatility, that there's something I could say to maybe express. I want to consider some shares around this like 125 to 120 zone. Let me see if I can do something on Boeing right here. So BA, maybe do a ratio spread. IV is still 100. I should be able to get a lot of premium for this trade. Let me have a look. So we have earnings on the 23rd. I'm interested in something around like maybe the $100 zone. Let me see if I can get something pretty fancy at like $100. So if I go out, like, let's go 80 days on Boeing, that's December 20th. If I were to buy, I mean, depends on what the liquidity is here, but if I were to, if I buy the 105, that's not going to be what I want. So I don't really get a lot of credit I get credits within about $20 of price, but anything beyond that, anything like the lower deltas, like 10 delta or lower, you get essentially nothing for it. So I don't love that. I guess what I could do is I could just place a credit spread here around like the 125 handle, like the 125. These previous lows at 118. I think I'm going to do this. I'm going to do a 125 by 120 and try to get this filled for, let's say, let me see what an at the money is right now. This will give me a good idea if I can get what I want. So I can get 240 if I'm pretty much at the money. I'll try to do the same thing here. I'm going to do a 125 by 120 bull put spread. I'm going to go after a 2.30 credit. And that should be about a $270 risk for a $230 profit. I'm going to take 2 contracts here because I'm willing to accept shares of one of them and then dump the other one for a small loss. I don't mind taking Boeing and trying to repair the stock. At the money calls, you can get a decent amount of premium for it to do a quick repair. Similar to what we talked about, Trader brought it up yesterday in this session, asking me about MicroStrategy. So anyway, I'm going to put the trade order in here. I'm going to sell the 125 put, buy the 120 put, go after 230 credit, going after 2 contracts, and I'm going to set this trade up. So that's going to be a pending order. Okay, so pending order 9732, pending order. All right, just need to get these positions pending. I'll add this in the Discord channel for my Pulver alerts. And then we can run through some charts and some analysis. Okay, so that's pending. Add this into my tracker here. And then I'll update Discord as well. So that's a pending order. It's not filled right now. I was hoping I'd get a little bit more action today, like a ratio spread, but it's not looking great. So this is a 12/20 expiration, 125 by 120 bull put spread. I'm going after a pending credit of $2.30. And I'm willing to own shares. Okay, willing to own shares. That gets filled. Okay, really quickly, we are still seeing this China stuff just rip to the upside. I'm just trying not to get in the way of it. Making adjustments as we go. HSI is way up here today, up another 6%, just ridiculous. I expect to see pullbacks at some point, which is totally fine. I'm making the adjustment here as well. So we have a red candle on the day, but we had a pretty large gap to the upside. Baidu making an adjustment here, and FXI making an adjustment here. KWeb adjustment here. JD, man, this thing is nuts. So we bought it at 32.50. It was up to 46 today. Likely a pullback coming. Let me just put a fib on this one. And that's not guaranteed that's going to be the top, but I'm just going to pay attention to those levels. And we're just continuing to watch some good price action to the upside on China. This is, look, this is like pent up technicals where for the last year plus, I have been looking to kind of slowly and small position wise accumulate some exposure on some of these China plays. And this is taken off better than expected. And I think there's still some legs to it. I think, yes, we should have a pullback and maybe a bull flag and maybe a pause. But if it just goes absolutely ballistic to the upside, I mean, even if I'm I'm covered on Baidu at 125 and 130. If I get the stock called away or prices above those call levels and I have to roll for debits, I'll just let the stock get called away or just close it for a max profit. And not really worry about it. Baba, same thing. I'm running with those uncovered. FXI running. That's actually covered at $30. JD is running uncovered. So for what's uncovered, I'm trying to obviously hang on to some of those profits. So anyway, but China stuff continues to impress. Hopefully it still does. One thing I want to bring everyone's attention to today, I've mentioned this in a lot of sessions here. If we're going to see, a bit of a liquidity crunch or some wider credit spreads, JNK is a good instrument to watch for maybe geopolitical risk and some risk off trading. I didn't check currencies today, but here's currencies. So what do we have? Japanese yen, crazy week. Again, I don't know why anybody trades the Japanese yen. The amount of swings and extremes you're getting on the Japanese yen is absolutely nuts. But it is what it is. So how many of you out there are trading the yen right now? And if so, is it helping? Are you making money? If you're scalping and you get days like this, I'm sure it's great. But it's, we have like, I can't remember how many days. It seems like, every few days, it's like the Japanese yen is either the weakest currency in the world or it's the strongest currency in the world. And I don't know what you do with that. So I still think we have these massive moves from like July's tops and bottoms into August 5th tops and bottoms, depending on what currency or correlation you're looking at. So anyway, it's just wild stuff. Yeah, I bet you did. There you go. All right. So anyway, watching JNK, in case we have some widening credit spreads right now, seems to be pretty tight. But if this starts to get loose to the downside, then we are definitely going to be looking at some risk-off trading. Taking a look at the indexes really quickly, going top down. So S&P, Nasdaq, Dow, Russell, dollar, oil, gold, silver. Oil had a lot of drama yesterday. I posted this update in my trading journal section. So let's look at the SPX. Starting off today. So yesterday we started off with a red day. Everything was down in the U.S. yesterday. We're kind of fighting back a little bit here and there. I don't know if the market's going to be able to, breach these highs anytime soon. We might just have a little bit of chop going on in the U.S. market, so I want to keep a close eye on that. So we're up a little bit today, or just at least a green candle. Nasdaq, same thing, kind of fighting back from yesterday's sell-off. Dow, sideways. Russell, fighting back a little bit from yesterday's sell-off. Volatility has faded slightly. We had about a 25% move from low to high. Ended up closing about 15% higher on volatility yesterday. It's fading a little bit today. And I've got to check on my SPX positions for. Hang on a second here. So my 3. Okay, so I need to watch this one. So 690. I'm going to go make the adjustment here for a 690. They cancel it? Canceled it. All right, so that's a 690. This one should be okay. Credit pending. All right. I got to go to this account here. SPX 1, 2, 3, 4. This was initially filled for 365, so that's going to be 730 debit. Keep an eye on that one. Why are you canceling my order, dude? 1, 2, 3, 4. Close. Hmm. 6.90. That's weird. All right, I'm just going to keep an eye on that one then. I'm trying to put in a stop loss at 690 just in case, but I'll monitor this one. All right, never mind. I'll come back to that. So volatility's down. Dollar index. This is why I kept saying you got to watch that bear trap on the dollar, and we've seen 3 days of dollar strength. Which is anybody surprised by this? If you look back and find this really nice structural support, the dollar's been holding that 101 level, that 150 level. It just was sitting here oversold, overextended, bear trap city, and now we're ripping up here for just the last couple of days. Is it truly risk off trading? A little bit, not a ton. And honestly, yeah, even if the dollar is strong right now, I don't look at this dollar as making some wild move to the upside. I would say the dollar, maybe test this area right in here, and then I look for the bears to come back in and either push it back down to the same lows or possibly resume selling. But just be prepared for some choppiness on the dollar. If we pull back into this area or like the halfway point, I'm just looking for confirmation to turn on the dollar. So my goal is to be selling the dollar. I'm just looking to sell it at higher prices. That's it. Okay. All right. So dollar is up. I'm going to set a chart alarm in here if I can. 102.13. If we pull back into this kind of structure zone, 102.50 to 103 would be kind of a sell zone for me. I'll put a 102. I'll do 102.50. 102.50, and a resistance area on the dollar. Look and then see if I can get some sell pressure on the dollar. Let's go to oil. So tensions rising in the Middle East. We've got missiles firing like crazy. Lebanon, Hezbollah, Israel. It's ugly. It's not fun. I hope this doesn't escalate more than it already has, but you never know. Oil prices are up. I had a long discussion yesterday on oil prices, inflation. It's going to matter. I mean, if oil prices go up into the mid 70s, it's going to impact what we get readings on later this year in inflation. I thought it was interesting yesterday going through this third-party Trueflation reading. We've seen a bottom in inflation. So according to this is kind of nuts. This bottom in inflation, it doesn't read the same way as the CPI that we're going to see next week on Thursday, but something tells me that the year-over-year 2.5 that printed, and we're having an updated print on Thursday next week, something tells me that we might print a low, let's say like 2.3. I'm just guessing here. But if we print 2.3 and it somehow reflects what this is doing, that might be the low that we won't see ever again, or at least for a while. Especially if oil prices are going up, inflation is going to have a hard time going lower. Now, core CPI is different because that is excluding energy and excluding food. But to the everyday consumer, you pay gas at the pump and you buy groceries at the store. And those are the two like biggest items for what we feel is inflation every single day. So I'm curious how this all plays out, because if we have a bottom in inflation here that's starting to go up, we might see the print and the timing of this to be like, oh, look, it's 2.5 and it's printing, it's lower. Excellent. The Fed is closer to the target, which justifies the rate cuts. But if we see a print of 2.3 and everyone gets excited, but then the next time we print, we see like a 2.6, I do wonder what that does for like the Fed's path moving forward, right? Remember, we have inflation next Thursday on the CPI readings. We do have the election on the 5th. We have an FOMC on the 7th. They're still looking to cut rates. The market might ignore inflation for right now because we're still in Q4 and seasonality stuff. But going into 2025, if inflation is not improving, all of a sudden we might see the Fed pivot back and forth. What was the talk for the last 2 years of the Fed? Inflation, inflation, inflation. And just this year in July, it's employment, employment, employment. Right? Now, all of a sudden, if it switches where employment's looking steady and stable and inflation starts to get sticky again, that just keeps going back and forth. And the Fed, can't make up its mind on what's going to be their focus. So,
hey, Chris.
Frank, what's up, man? How are you?
Pretty good. How are you?
Good.
How's this week been?
So far, so good. Just watching some levels here. I've got a couple trades running the SPX that I got to monitor.
Gotcha.
So that's
Same
all.
here. The oil trade is working out well. Oxy's doing better.
Yep.
Your call on China was amazing. My Baidu is up a lot.
Good.
I'm sure you're rolling in that right now. You got a ton of exposure from what
it's pretty good. It's pretty good. I mean, I'm just trying to stay out of the way. If it's going to continue to run and have some melt ups, like I'm trying not to, add covered calls and get in too quickly. Where right now the only one that's covered is I think Baidu is covered at 125 and 130. Baba's running uncovered. FXI is running at 30. That's already covered, but that's like my least exposure on FXI because I did a bunch of trades earlier. K-Web runs uncovered and JD's uncovered. So I'm letting them run. I'm not quite at profit targets yet, but I'm up a decent amount. I mean, I don't know what it is. It's probably maybe 50 grand right now. Maybe,
Jeez.
Hopefully more. We'll see. Let me check. So Baba is up 12.7. I'll just do a quick tally here. So 12.7. Baidu is up 12.5. I have some FXI,
Easy
which
money.
is up 75. I have, JD is up 13. And K-Web is up 2.3. So I'm up $48,000 right now on China.
Nice.
Hopefully more to come. Yeah.
How long have you been in this trade?
A while. I mean, I've been holding some China stuff like on and off and a lot of like income generating credit spreads. I've taken some shares, worked a cost basis lower. I'd say on and off for a year. So this is why I'm also, as you say, like, oh, congratulations. I'm like, yeah, well, I've been sitting in these trades for a year, so it's more like it's about time. So
Yeah.
I'm just trying to, let them run, let them still drift, and the moves we've seen have been ridiculous. I mean, when I'm looking at the entire U.S. market flat or down, and I look at everything here at 4, 5, 6, 7, 8% higher, I'm like, okay, there's clearly a lot of like just throwing money at these China stocks, trying to catch whatever they're going to throw at us. And I just think right now, if it's good for another like 30 to 60 days of just like drifting higher, fine. I'm watching price closely because we also know that a move like this is pretty non-typical, right? Like it's a very atypical move. So if we go from low to high and this thing consolidates here, then I'm going to look for one more push higher before I start taking profit. What I don't want to see is this turns to this. That's what I don't want to see. I don't know if that's going to happen. I think that there's enough interest here with the stimulus going on. If the U.S. can kind of navigate the current 30 days and we can get through this month of employment and this month of inflation and then the election, and then all of a sudden the U.S. kind of realigns with like liquidity and just basically all the late season Q4 seasonality to the upside. If the U.S. and China can align for the push in the end of the year, I think everything has a chance to go up. And I think China's still a part of that move, and there's still a long ways to go. I mean, if I look at these charts and zoom out, all these China plays still have plenty of upside. I mean, to me, it's like I don't want to stop this thing at 121. It's like I want to see if this will actually move, and you never know. Like this could be for what's been building and accumulating for over a year. I mean, I'm talking. I started participating in this trade back in like April of 2023. So it's been over a year of these like little stabs with Alibaba, little stabs with Baidu, and now it's finally starting to pay its dividends, which is nice. But if I just do a simple measure move like 130 is conservative, gaps up here at 150 to 160, I'd be really happy with that. If we see a big rotation into non-US or even just this flood into like just buy everything, I mean, I don't know, Frank, it might head up to 150 to $200, and as long as I don't get in the way of it, that's a big profit for me. But I will say this: once I take my profit, I'm probably not participating any further, most likely. Or if I do, it's going to be like defined risk option stuff, and that's about it. I'm not going to chase stuff.
What do you think will have to happen for it to have a harsh correction?
For China to somehow say that their stimulus package is going to be less than expected. So basically, they'd have to come out just they'd have to vocalize. We said we're going to do this, but we're going to be. I mean, they would just have to completely erase what they just said. And I think if they just keep their mouth shut right now, there's enough order flows going in for 30 to 60 to 90 days that I'm just trying not to fight it. So,
Gotcha.
Yeah. Or I guess the other side would be what they can't control would be like other geopolitical stuff. If this Middle East stuff escalates even further, it won't really matter, what China's doing, because maybe it's a risk-off environment across the board, and that sentiment takes a big shift, and all this money gets pulled out and goes into safety. I don't know, but We'll see. So I'm just, like I said, I'm just watching day by day. It's pretty interesting. What else do you have going on, dude? Did you see my trade in Nike? I took a little profit on Nike. That worked out pretty nicely for a morning.
No, I did not see that, but
yep.
I'm also exposed in Nike. I got it. I think it was after earnings was it last earnings? I got it in the 70s, I think.
Okay.
And so I've been just holding on to it, but it had a rough earnings report, I guess. So price fell like 7%, but overall the trend has been up. So I'm happy that I'm still in it. I honestly like the stock. What are you looking at like limited upside, or like what are you doing? Are you trying to sell puts in it?
It was I'm already out of the trade. Like when I did the ratio spread and the credit spreads down here, that was about a 75% profit on the ratio spread. So I just took it. And then I did the trade here where I bought the 89 put and call, and I sold $10 wide, and it had about a $7 move. So I protected, I took a 560 debit, closed it out for 680 this morning, and made about 20% return on capital, and I got out. The expected move was about $8, and it moved 7 and change. So I thought that was good enough for especially holding it for one day just to get in and out. So
yeah, very good trade.
Yep. So it was fine. So that trade I can delete this stuff now.
I'm looking at gold too. So pulling up GLD.
Okay.
So do you think geopolitical tensions have anything to do with gold's price as well? Do you think that's is that what caused the spike yesterday? Like, were we expecting a greater pullback and then we saw the news in the middle?
Probably. Yeah, I mean, I think oil was the big tell yesterday. I mean, oil had an 8+% move on the day from low to high. Like this is a wild candle in oil. And I think that's what pushed gold right back up to those recent highs. So yesterday's candle from low to high up 8.06%, give or take a couple of decimals there. But an 8% swing in oil is very aggressive intraday. I mean, I'd like to see that oil maintains bid off these 65 to 67.50 levels. Now, I see that as just support. But the problem is this support in addition to crazy amounts of geopolitical risk that might get more severe? I don't know. So, I mean, if oil prices are going up because of geopolitical tensions, then I think gold continues to stay pretty bid. And even with my, simple pullbacks, I'm like, look, I will gladly add some trades on GLD and add some trades on gold futures if I can just find a balance. I mean, even the 50 period moving average is so easy to hit, and it's like we're not going to hit it, or we're not hitting it yet. So I did mention, and I did a video on this yesterday, if I see that we are about 20% above the 200 moving average, I'm looking for a reversion. That doesn't mean I'm shorting gold. That just means that I'm looking for the likely pullback. And so I definitely want to buy it. But the last time we saw it, like right here, it was pretty overextended. I think that was around 15%. Let me double check that number. So we hit this high here, and we were up around 15% above the 200 EMA, and we went sideways. We obviously didn't hit it, but we at least let something catch up to it. And so it catches up to the 50 offers support. So same thing here. If the 50 offers support, and maybe it's this, Frank, maybe it's just sideways and the 50 catches up, and then we can use that as another, kind of dynamic support to keep it going higher.
Yeah, I agree.
Anyway,
just waiting on that pullback to happen. We saw a 1% pullback, and I was thinking this could be it. This could be the only thing we see. And that kind of came true yesterday, but I also think if these tensions or the news starts to dwindle in the Middle East, it'll probably start coming back down and taking a breather. But yeah, this uptrend was way too steep.
Yeah.
So it's just not something you want to be chasing right now. But
I agree. I'm not chasing the upside. That's for sure.
What are you thinking about stocks? Because I'm looking at the S&P. I took a trade on the SPX this morning. I sold a bear put spread at this green line, which is 56.75. So as long as price stays above that by the end of the day, it'll expire for full profit. I think it was $1.20 credit.
Okay.
So far it's looking decent, but a lot can happen during the day, so don't want to say anything yet. But that's what I got going on today.
All right. Very nice. So anything, I'm actually looking, so price wise today, I've got SPX here. We're starting to get some gamma levels getting filled up to the upside. Let me go back to SPY and see if everything's lighting up in real time. So nothing really on the bullish side. We came right down to my gamma level at 565 this morning, bounced off that pretty aggressively. We've just filled the gap. Still haven't taken out a recent high from yesterday. I don't know. I'm a little, I don't know. I don't want to say I'm bearish necessarily, but it would make sense to me that there's just a lot of kind of uncertainty in the market where we may not be able to justify new highs until we have the market more excited about something like non-farm on Friday, or maybe inflation next week on Thursday. Obviously, when inflation rolls out Thursday, we're going to start getting into earnings season. So is inflation next week? I think it is. So we have non-farm. So ADP was better today. We have unemployment claims and services PMI tomorrow, non-farm Friday. Next week on Thursday should be CPI. We have minutes on Wednesday, CPI on Thursday, and then earnings season is officially kicking off. Mag 7, I think, is either this week or the following week from the 7th through the 11th, or it's the following week with a lot of the Mag 7s reporting. And that's the combination. I mean, other than that, it's like it's all election. I don't know if you watched the vice presidential debate last night. I didn't. It didn't really budge the market. I don't know. I don't really care. I wasn't
It's
going
all
to watch.
little.
Saw a
It
little.
was very respectful.
I mean, that's good. Better. But I mean, I don't know if everyone just expected to be drama. I just finished the Mr. McMahon thing on on Netflix. So I'm like, is that what we're doing? Is that our politics situation? Is just everything's like it's all like hyperbole, and it's got to be the biggest extremes. And so at least it was respectful. Respectful is nice.
Yeah.
Anyway, all right.
I don't know.
But either way, whether we like it or not, there's an election coming in 30 to 40 days, and we'll figure out what that looks like for the markets too.
Yep, we will see. I am with you though. I don't really see much room past the highs. I don't even know if we'll go back up and touch the highs again, but I think that today's news wasn't necessarily bad in any way. I think we'll probably just get a lot of consolidation. At least that's what I'm hoping for. Just as long as we don't break under that level, I don't really see a real catalyst for a move lower unless we get something worse happening out in the Middle East, which would be bad. But
okay,
today seems not as heavy as yesterday.
Yeah, yesterday it was definitely leaning like, all right, we've got another kind of rough start to the month. One thing I looked at from yesterday's price action too, and this still matters. I mean, if we go take a look at the price action from the last couple of weeks, so a lot of volatility on Monday's close, Tuesday's open. We finished here yesterday, we pushed down today. I mean, are we making lower highs and lower lows? We did take out last week's low, so I would imagine that based on the probabilities I see, that this would still be a red candle for the week. So I'm still looking for the week to kind of finish red, finish choppy. If price starts to roll over and roll down, I'm looking at this potential gap fill on the FOMC. So the trades that I'm in to take advantage of that, it would be, so if we get to this gap fill, the instruments that I'm using, I am looking at a MES, so MES long put and an MNQ long put. And I think I have a broken wing butterfly on that as well. I have an ES broken wing butterfly. So just a couple of stabs there. If that gets filled by the end of October, then there's some good profit to be had. If price falls aggressively, then my long puts with no cap, I'm going to try to take some profit on those if we end up pushing down.
So are you betting? Are you trying to collect premium until then, or are you betting on like?
No, those are just hedges. Those are hedges. I'm not long. Like I'm not doing anything directionally. I think that the bigger flows are coming in like after the election, in my opinion. I think this market. So I heard some interesting stuff. Go back to 1950 to now, and anytime the market's been up over 20% in this first half of the year, October is typically a down month to the tune of like an average of like 2 to 3%. So it's like October sets up, if the market's had this great performance from like January to September, October typically offers like a dip to buy into the end of the year. That's like a 70 plus year track record. Now, there could be a little like seasonality and cherry picking to that, but it does fall in line with what we have. I mean, the market is up 20+% for the year, like 20 year to date. We go to the sectors right here, look at the S&P. We did cross year to date. I mean, we're up 19.68% year to date on the S&P. So we're right there. Like, yeah, I mean, usually the first half of the year over 10%. Market finishes higher for the rest of the year. So I still think those momentum indicators are still there. I still think the flows are still there. I just wonder if the market won't make a bigger bullish move starting October. It's going to wait until after the election, and then it's just going to keep doing its thing. So I don't know if the market has a big reaction. I mean, if Kamala Harris wins the election, the market may not have a huge reaction as opposed to like a change in leadership, I guess. If Trump is president, does that mean more tax cuts, more, I guess, deregulation? I think tariffs will be a terrible thing for the economy and for inflation, but the market might get excited on just tax structure and cuts and things like that. So I have no idea. I mean, 2016, there was a huge Trump trade. That was a wild move in the currency market, wild move in the stock market. but who knows? Like, we're sitting here near all-time highs, and I'm just following along with the structure I see. It's like, it's hard for me to be bearish outside of this would have to break for me to say, Frank, I think we have a bearish situation. But until then, I think that all we have is we have some indecision, right? A little bit of pullback, maybe to the tune of, let's say 2 to 5%, something like that. Doesn't violate this low, and then there's still room to go higher. 6,000 could be the milestone this year, and then we settle back in, some reversion. Again, one thing we could watch for is go to the 50, the 100, and the 200. Just taking some really simple moving averages. We're not crazy overextended yet, but if this keeps going higher, I'm going to look at the same thing I looked at on gold. How far away do we get from the 200 in addition to the bars? So if we have a high bar count, like 300 plus bars, and we have a distance of, let's say, 20% higher or lower, I think that reversion is very likely,
Yeah.
So anyway, that's what I'm looking for.
So the higher the divergence, the worse the correction, or the more
or just the more necessary the correction is. It doesn't have to be like, it doesn't have to be a nasty correction. It just means like, we'll just stop going higher and start winding down. And and if it's an extreme where we get like this ballistic move to the upside and this melt up, well, then the correction is going to be a little bit more violent. I mean, if you like China, for example, it makes me a little bit nervous to see that type of move. A lot of times that type of move, when it's done, can oftentimes correct very, very violently. But if we go up and we at least base a little bit with like a bull flag, then there's at least a healthy market there to see that the order flow keeps coming in. But if we just go parabolic, I mean, that's going to end awful. Like, same thing with lumber, cocoa, Bitcoin's done it in the past. Trying to think, I mean, hell, NVIDIA did it. I mean, you look at some of the semiconductor stuff, they were all parabolic and they pulled back a lot. I do have an NVIDIA hedge running as well. This one is actually so this is a good example here, Frank. Here is the 200 moving average on the daily, and we're over 400 bars. 400 bars on NVIDIA to find the 200. And at this period, let me see what that percentage was. So if I go up to the top, we were about 40% overextended from the 200 EMA. Now, there's not like some perfect rule to this, but I would say getting 40+% overextended, I think we're going to find it. And so I think NVIDIA, if not a lot happens, we're making kind of a move like this on NVIDIA. And I think this 200 EMA gets hit before NVIDIA has any chance of hitting higher highs. So I'm trading that right now. I'm looking to see if NVIDIA will come down and find this low or find this 200 EMA before I start to reposition long. So that's all.
Gotcha.
Yeah. But
I like that.
Gold's decent. Silver's decent. Bitcoin had a pretty nasty pullback the last couple of days. Mag 7 stuff, let's take a quick peek. Apple's down. Amazon, I guess flat. They're flat. Google's down by 1% today. Meta's down 0.7. Microsoft down 0.6. Netflix is up. Go figure. I don't know. NVIDIA's up 1%. Tesla down 5% today. Yikes. Any news on Tesla? Let's see.
Yeah, I wonder why.
That's a big miss. I mean, not miss. It's not an earnings play, but that's a big gap to the downside on Tesla, and I'm not really sure why.
They had delivery numbers this morning.
Is that what it is? It says we'll report Q3 deliveries, but I don't know if they did it yet. Maybe they did.
It says Tesla stock is down after solid delivery numbers.
Okay.
So it's
well, I still like Tesla. I'm just saying I want to buy it lower, a lot lower actually. So I put the trade on. I need to update my trade for. I need to update my trade for BA. I did a trade on Boeing today. That one's I'll put in my pull report section for Discord. Bond wise, things are down in bonds. Yields are up. Look at this 30-year, man. 30 years up, 20 years up, 10 years up. I think the bond market is making everybody feel foolish for jumping into this rate cut stuff. It's interesting. So we're still inverted by 13 basis points. We have dipped a little bit. I wonder if this actually heads lower. And I mean, I don't know if we're going to get inverted again, but that's one thing that would probably keep the market humming along would be getting back to an inverted yield curve. Not that anybody wants to see that, but I think that's necessary, especially with the correlation of the labor market.
Yeah, watching it drop made me wonder if this was just going to blow over soon. Let's see the T10. We're at what, 14% now?
For what?
13% or 0.13%.
0.1, yeah, 0.13 I think is the reading, so 13 basis points. Let's go to some boring stocks. 22.15 on AT&T. I'm still letting this one run uncovered. That expired, so it didn't get called away. Let me see here. I'm going to take a look at AT&T. I might throw in another covered call. I've had this one for a while. It's been a good dividend play for me. AT&T. Currently up about $1,700. If I were to take the trade off, let's go here. So if I go trade, I can get 24 cents. Let me go out another week. I'm going to try to get right through earnings. Let's go to the 18th, right before earnings. Earnings is on the 23rd. I'll go to the 18th. You just get no premium for it, man.
I mean,
Just gonna let it run, dude. It doesn't move, I know. And honestly, let me look at the structure here. AT&T hopefully has some room to catch up. I guess question I've got to ask is, have we done enough of a push to the upside that we get a pullback? And I think it might be in my best interest just to take profit. So if it's going to pull back on earnings, I can obviously get back in and reposition. I like this back into the $20, the $24 area. There's a lot of support right in here around $24. So that was kind of my price target to end up taking some profit. Unfortunately, I just don't see covered calls offer me much. If I want to lower the cost basis by, it saves me $100 right here if I get in with the $22 call. But if it goes to the upside, I'm capping my gains. I'm only getting 36 cents for it. Where if we go to $24, that's $1.85 of extra gains that I'd rather just sit on. So I think prior to earnings, I'm just gonna let AT&T just do its thing. But I might make a decision to close it out prior to earnings if I've got a decent chunk of profit. If I'm up $2,000, I might just take the profit.
Yeah.
Let's see what else.
What else?
What is going on, dude? I've got I want to find some extra trades, but I'm just trying not to get in the way, dude. I like my position on China stuff. I'm going to let them run. I'm picking my battles on the indexes. I'm, taking some stabs every day at the SPX, and that's going pretty well. I had 2 out of 3 winners today. The third one's still running, but I've got 2 winners out of the 3 that I've taken. I'm still monitoring the other trade. And then
trade?
What's that?
What kind of trade are they?
They're like little synthetic strangles. So I'm just trying to sell some premium in the open and grab a couple of bucks. So I did a $3.35 credit and took a $2.95 debit. So I grabbed 40 cents a contract. And so I typically do that early in the mornings.
Nice. I'm doing not the same thing, but I guess in a way betting on less volatility at the same time.
Mm-hmm.
But so this morning we opened up lower and then we continued to fall for 30 minutes. So then that's when I took the credit spread, the bull put spread. So I guess I'm not doing too much, but I am just kind of trying to stay out of the way as well. Just don't get too fancy with it and, let the trade do its thing. So far, it's been working out pretty well. So nothing has really gone against me yet, but I probably shouldn't jinx myself. We've seen some good trades so far, just selling at the lows or selling at the highs and just collecting premium. So
yeah, that's not bad. I think it's just stay afloat. I have some hedges that might not pay off at all, and that's okay. But I'm looking to see, if the market just kind of stalls and hums along, maybe we have a bit of a pullback. But look, any type of pullback here, as long as we're not taking out this Labor Day, this post Labor Day bottom, or obviously threatening this support right here. Even if we did that, I'm probably going to buy I'm going to buy the SPY. I'll buy SPY. I'll buy Qs. My hedges would have to be something. We'd have to get something pretty nasty, like 2-3% quickly, and then my hedges would pay off, and I'd probably be good closing those up, and then just making sure things are stabilizing from there. But I'm not really trying to overtrade this right now. I think that the way I'm positioned, I mean, my returns so far for the year have been pretty solid. China is now kicking off in a big way. I think the next big leg to my trade would be Bitcoin. I mean, if we see Bitcoin revisiting lows in the low 50s, then I did put on a fresh trade on MicroStrategy. So I did a it's an 80 by 70. Those are both sell puts, collected 725. I'll be watching that closely just for some income. I have my this is a 111 trade, so I've got some income where between these two trades right here, I mean, I know I had a trade for like $7 that already expired for profit. This one would be another roughly $9 a credit. So I mean, without owning MicroStrategy, I mean, there's $1,000 for one contract. And you know, I just think this is either a range that I can participate at the lows, or this thing rips to the upside, and this is just income. I don't own any shares of MicroStrategy. I kind of want to say that I'd like to own it, but I'd like to see a pullback first. In fact, I'm going to set a chart alarm here, Frank, around 120. And I'm not going to buy like a full tranche. I'm not going to buy 100 shares, but I would probably throw in like $1,000 to $1,500 at it and just kind of start a little bit of a campaign for dollar cost averaging. And then the rest would be just, you know, watching everything else. What's the overall consensus? Where are the Mag 7s at? Is this a broad market? Are we making higher highs? I wouldn't mind seeing a pullback though. Not extreme, nothing that's going to like damage the kind of the integrity of this uptrend right now, but there's a lot of support in here that can still hold nicely. A little pullback to the 50 that shows bid, a little pullback to the 100 that shows bid. To me, that makes a lot of sense. I wouldn't be surprised if it does catch bids here, that the 200 just keeps doing its thing. And eventually when we get overstretched, I'm going to watch, and you and I will talk about that rate of change and that percentage distance. And then I'll get a little bit more bold when it comes to levels that I would kind of call a top. Because I mean, to me, this is, if we get above 6,000 and my price to earnings, price to sales, price to peak earnings, all these valuations where it's higher than it was in 2020, higher than it was in 2008, higher than it was in 2000, something tells me that the market, as it always does, will find ways to correct. Does that make sense? Like if we're showing like 30 price to peak earnings and the historical high was 27, I'm gonna be like looking for tops. I'm gonna be looking for price to fade, and you never know what's gonna cause the drop, right? I mean, and that's the one thing, is everyone's calling for recession. The U.S. is gonna roll over, but it's probably going to be the thing you least expect. And that's what is so scary about, you know, a correction that could be 10, 15, 20%, is it could be bad. So nobody knows. And the only thing I'm watching is, we talk about this, but JNK, you know, if this starts to go down here, Frank, we got to pay attention to this, because if this drops aggressively, that means that, you know, lending, liquidity, credit conditions are getting a little bit tighter, and that's usually not good for the stock market. So we haven't seen that yet, but there is a pretty decent gap from yesterday with rising Middle East stuff, escalated tensions geopolitically. So unless we see, like, I mean, this was immediate V bottom. This was V bottom. So, I mean, I'm not like, oh my gosh, it's happening. It's like, I just want to watch it. So this is something just to spot check each and every day. You know, our job numbers, we'll get employment. It's unemployment claims tomorrow, or the continuing unemployment claims tomorrow. And then we have non-farm on Friday. So I think that's a big one. What are the numbers for Friday, real quick? If we go to Friday, I think we're expecting like 140K.
So I think we're expecting more. It's almost like unchanged, but I feel like that could be setting up for a big beat to the upside.
You think so?
Well, I just think that, so NFP is very unpredictable, but what we needed to see was the Fed's justification for cutting rates so aggressively, because the forecast was 25, and then Fed Watch went up to 50. So they're there to save the labor market. It's no longer about inflation, really. And we've seen better jolts, better private payroll numbers. I kind of expect non-farm to be better I don't know how much better, but I think maybe a solid beat in what we're expecting. And then I think that's going to be the main driver. I think CPI is not really going to do much unless CPI is
If it's higher.
if it's much higher.
Yeah.
If it doesn't really move higher or lower, like say it's a little higher or a little lower, I don't think it's going to do anything.
I agree. I wouldn't be surprised if we get, so CPI is always like lagging. It's lagging metrics that go into the CPI reading that we're getting next Thursday. I wouldn't be surprised if it is an improvement from the 2.5 year over year. But again, watching oil prices, I mean, there's a pretty easy correlation here. If you go to oil prices, let me get rid of these moving averages here. Go to oil prices, and you look at this compared to Trueflation. So if I just take a screenshot of this recent high in April to current, and you go to, let's go April of this year. I mean, this looks pretty much identical to oil, right? April of 2024 to now, and then oil. I mean, you might as well be looking at oil. So I think this is a big piece where the U.S. might think that everything's looking good and employment's getting better and inflation's going down, but in a quick geopolitical escalation and oil prices going up $4, $5, $6, $7 or going up, maybe close to 10%, that changes the inflation scenario pretty aggressively. So I'm just thinking, like, obviously it's going to be month by month and data points, but I don't think the Fed is really going to change anything this year. They will likely cut. I don't think the Fed watch tool is showing anything different. It's probably still going to be another 25 cut by November, December. I know the probability for December is actually a 50 basis points cut. And so right now, this is November, looking at 25 basis points. And then December, the higher probability is 50 basis points. So I think the Fed is still going to cut, stay on pace, but it's going to get trickier and stickier in Q1, Q2 of next year if inflation doesn't continue to trend lower, because we will have CPI readings every month. And obviously the Fed wants to see inflation trending lower. Nobody's worried about it right now. But if oil goes up to $80, dude, it's going to stick. So I don't think we can ignore what oil is potentially doing outside of, I mean, if it holds support, that's fine. I mean, I make money on oil if it holds support. But what it does to inflation, what the Fed does moving forward in 2025, this might change the narrative a lot, where the market's already expecting another, 1% of cuts. And maybe I don't know. I think the worst thing is if they pause, right? They cut, 50, 25, 25, and then they go into 2025's rate decisions and they just pause. I don't think the market's going to love that. So time will tell. But I think right now, path of least resistance remains bullish. There's tons of liquidity coming in. Global money supply is increasing. So there's your M2. China's a big contributor right now. So is the US. We're at new fresh highs. That's going to find its way into the market. I don't think we have anything outside of some oscillation, anything outside of some sideways movement. It could be a little bit choppy in here. Don't be surprised with these levels that I've noted on my charts, like hitting that FOMC low. That might be a decent pullback level. So if we go from high to FOMC low, that's about a 2.7% pullback. As long as we don't do any damage to this September, this is the Labor Day sell-off. If we don't do any damage there, we're still making higher lows, higher highs, higher lows, higher highs. It gets a little bit dicey in here if we form like rising wedges, but that probably blows off the top and then corrects later. So part of me is just like, look, let the markets do a thing. They're in orbit. Path of least resistance is bullish. Don't do anything stupid. Don't overhedge. I'm talking out loud and trying to listen to myself too. I don't want to overhedge. I don't want to overspend. If the best thing I can do is just sit on my hands for 30 to 45 days, let us get through this news cycle. Let us get through the election, kind of reprice with what it's given us day to day. As long as you don't do anything stupid, we'll probably finish higher in the year, Frank. So I'd rather not try to overhedge and just have a couple things in there where it's like, yeah, I'm hedged. I'm hedged out to November 15th. And if those don't pay out, then I'll probably hedge again until January, February, just in case. But it's kind of the cost of doing business to make sure I can mitigate any type of nasty drawdown. So
if you talk about sitting on your hands, I mean, to your point, we're back at where we started on the 19th of September. So we're just at the same price that we started out then. So I would just say that if you weren't selling options, like if you weren't doing stuff to, keep price like pinned down, probably weren't making anything. So if you bought the S&P like nearly a month ago, it would be unchanged today. It's just hard to really gauge where anything is going. I mean, I don't know if it's going to go as high as what you might be projecting, like all the way up there where that trend line is. I mean, I can
it's
see
6,000, dude. I
that's
mean,
such
it's single digit percents. We have another, 4.5 to 5% move by the end of the year. You don't think Q4 can deliver that? You don't think Q4 Q1 combo can deliver that? That's
so we
like
have
where
3
all the order
months
flows
to
come
get
in.
there.
What's that?
We have 3 months to get there, I guess.
Yeah, if it's by the end of the year, but we could also just melt up like, hey, business as usual, January, and the market's just like, we're going higher. I mean, Q4 Q1 combo is usually pretty darn good. So, I mean, yeah, we might not get there by December, but I mean, usually the markets get way less volume from Thanksgiving to the end of the year. And if that volume is just met with more buyers and more drifts and lack of sellers, I mean, the market covers a lot of ground with low volume. So if we start to see a tapering of volume every single day, but this thing is put into orbit, it is easy for it just to drift higher because there's no sellers, So that's why I'm saying this could just melt up because everything's in place, cuts, gains. There's obviously like, there's targets out there that everyone's trying to get to. Everyone's called for 5,800. The updates of, okay, we'll be at 4,800 by the end of the year. We'll be at 5,000 by the end of the year. All of them have just been terrible forecasting. A lot of people are saying 5,800 by the end of the year. Well, does that mean that we go from current price, down to 5,500, then up to 5,800? I mean, that's still a good gain for this last part of the year. Or do we go up to 6,000 plus and then pull back to 5,800? And honestly, none of it matters because they're probably dead wrong anyway. So I'm just looking at the structure of the market right here. I mean, to me, this recent push makes sense that if we have any type of resistance, it's right around that 6,000 handle. So any pullbacks, I'm staying bullish. I'm doing campaign trades on the SPX or the SPY and the QQQs. I'm letting China do its thing. I'm letting it rip. I'm hoping that the geopolitical stuff doesn't get out of hand and the markets just kind of shrug it off. We get through the election without a lot of drama. And so really it's like, if there's no major disruption, we should be okay. Make sense?
Yeah.
Yeah.
And it's just going to be steady upside, I guess.
Yeah. And again, slow and slow and steady, right? But it doesn't have to be ballistic, and that's okay. But I think what's happening is, I had some hedges in here that paid out, some hedges in here that I lost, some hedges in here that paid out, some hedges in here now that I'm, this is a big question mark. Are they going to pay out, or am I wasting money? And if it goes up higher, I'll probably have some hedges in here that might be wasting money, but I also think it's important that I can mitigate. Let's say if the market drops 10% and I can only have like maybe a 3% pullback, that to me is doing my job, where I'm taking on way less risk than what the overall market is as far as like pure beta correlation, So I don't want to take on the same risk. So I'm constantly willing to spend the money to hedge, but I hate it when I lose it, right? I mean, that's why I don't spend a lot on those hedges. I think it's just important to have. So it's Howard Marks, it's Oak Tree Capital. It's just, risk is something you have to monitor constantly, as opposed to getting caught off guard by it and then trying to scramble to hedge after the fact. It never works that way. So anyway, I guess my summary for the day is I don't feel like I need to overtrade right now. There's definitely some income I'd like to position for. But honestly, I was just about to say, like, I could do like a bear, little broken wing butterfly at the top, but I'm like, dude, I think we could tap the top, Frank. I mean, this little like sell off. I mean, we could tap the top and tap the bottom and be the same place we've been since mid-September. So anything you think?
Yeah, I mean, but what time frame are you talking about?
I'm talking like maybe 1 to 2 weeks out.
Yeah, I mean, I can see it too. I can see us touching the all-time highs again in like a day or two.
So I guess for right now, this is probably pretty safe I've had these boxes on my chart, but you just mentioned this, like we had the FOMC low, which I have, it's my horizontal lines up and down, but just these last little wick lows, like look at this wick low. It was exactly low today. And then we have all-time highs. So right now, this is my new range for the SPX. And then if I go to the NDX, this one's a little bit more volatile, but interestingly enough, we came right back to the same low here and there. So there's my range on the SPX. Let's go to the Dow. I mean, outside of this like outlier all-time high that was rejected, and I will incorporate that, but we have the Dow that's sitting right in here with a lot of chop as well. So are we going to break out of this? I don't know. But I would say if we do make a break for it, the Dow at these all-time highs, if it breaks lower, does it have room to go FOMC lows or maybe eat into some of these inefficiencies? Maybe. But otherwise, we could just stay. In fact, now that I see this, Frank, let me look at a freaking strangle on this thing, or maybe an iron condor. Let me go DIA. I don't know if the premiums are going to be good because I'm probably only going to go out to like this week or next week, but let's find out price-wise. 426 to 418. 426 to 418. All right, if I go out to Friday on the Dow, let me see what this does. So DIA. If I go out to the 4th is only 2 days, this is going to give me nothing for premium, so it's probably a lost cause. If I go out to next week, get these bid and ask prices to fill in here. 426. Come on, broker. So 207 on the 426 and a 418 at 237. I mean, I get 452 credit. Now I'm probably going to go. We're right in the center. Is it worth going outside the expected move? Let's find out here. So outside the expected move, these are way high in the deltas. I was looking at the technicals. Let me see. If we stay below 426 and above 418, like that's, I don't know. I mean, that seems reasonable. If I do a dollar spread here or go wider, only go like 5 wide. So I can get 245 for risk of 255. I don't know. That might be a little tight. I'm just looking at stuff. 429 is way up there. I just like a strangle makes sense. What's up?
I would say look at this either tomorrow or Friday or Monday, because I think the IV could be much higher when you have NFP coming up.
That's true.
You probably get more premium if you think that it's just going to stay in this range, which honestly, I don't really know if I would take that, because you get solid jobs data that could definitely break the highs, in my opinion.
Yeah. Yeah, for sure. And I'm looking at so the Dow has its weekly expiration. So I was going to say if I did like a Friday to Monday, get it over the weekend, but this one doesn't have Monday, Wednesday, Friday expirations. So this Friday with non-farm, you're just not getting enough credit for it. So it's not worth it. It's not worth the trade. But I don't know. I'll kick this around. I might wait for non-farm. I might place the trade after non-farm to see what happens. If non-farm is still noisy, I might place a trade, above and below and just go to the expected moves and see if I can grab something.
Yeah.
Big Mike, I see Big Mike in there. I insanely shorted the Hang Seng today while I made money. I'm never trading that again. Yeah, I'm sure those are all pretty crazy. So they're nuts, man. I mean, and I'm not trying to fight it. Like I said, a bull flag to me is what I think is going to be like the healthiest situation for these China stocks. I just want to see a bit of a balance. I mean, pull back to the 30%. I mean, really simple, like retracement level would be if we had this blast off move, we pull back to the 30%. There's a good chance if this bounces, we're going to retest the highs. If we pull back to a 382 or 50, then there's a nice accumulation zone. We get back to the highs and then some. So obviously I'm looking for higher highs to form here. And if I get higher highs, then I'm probably going to start taking some profit. But all right, man. I will continue to look. We don't have a lot of earnings this week, but I think what I'm going to look for here, I still have a whole slew of stocks I posted in my Telegram a while back. I go here. Where are we at? I did a list. It was like 35 or 40 stocks. I'm just going to look for this really quickly. It's way back here. Come on. I'll find it somewhere. Fun with Telegram. Here we go. I'm going to take a look at some of these and see if I can find something. Boeing, I've got a trade on that, but I didn't like. I was going to like do a ratio spread. It just doesn't look great, so I'll stick with a credit spread if it goes lower. Lululemon, I have an income trade in that one. That's one that I plucked out of here. Intel, it's tempting, but I don't like the fair market value on Intel. Just doesn't stack up the right way. Oh, this is another one. I forgot about this one, Frank. I think I took all my profit on this one. Do I have anything left on Yum C? So this was Yum Brands China, so they're fast food stuff. I also had, I'm out of these trades. Okay, so that was all profitable. I did a bunch of puts on YUMC. And look at that thing. I didn't own any shares, but this thing essentially gave me like 95% profit on this recent run. So
Nice.
Didn't own a single share, but what a rip, man. I mean, low 30s to up 73%. Good Lord. Crazy.
That's great.
Yep.
That almost looks like a short squeeze.
I mean, but in a way it was. It's like, I mean, how many months in a row is like China's uninvestable, it's the worst, their balance sheet recession, blah, blah, blah. It's like, I get it, but this also had contrarian play written all over it. And it also had no acknowledgement for what the country just did, which is not a surprise. Since COVID, they've done nothing, right? Like no fiscal stimulus, no anything outside of maybe a little bit of jawboning, like, okay, we'll support the economy. They say it, they don't do it. And then this time they're like, we're doing it. And the market got all excited. But biggest package since COVID. So yeah, it is a short squeeze. I don't know if it's going to get faded, maybe it does, but if there's room to run and you've got a country that's, lifting animal spirits, so to speak, that this lift and this pause and this lift, it's like, who knows, man? I mean, these things, look left on your chart and see if this price action goes after those previous highs, and that's the trade. So anyway, that's all. Just crazy stuff, man. So I'm happy that I'm in it. I'm happy that I'm not chasing it. And hopefully there's some more profits to roll in. And then the rest, like I said, is don't do anything stupid. Don't overtrade. Don't do anything stupid. The markets for the U.S. just might be calm and silly, sideways. Box on the SPX, box on the Nasdaq, box on the Dow, and the Russell a little bit uglier. But I don't know. You could argue when this thing's ready, if it's ready. I would like to see another rate cut out of the Fed, possibly boost the Russell a little bit, if possible. But I don't think there's any reason to get into the Russell unless we stabilize in here where we have some gap fills. We have lows, higher lows. Let me take a look at those moving averages really quickly just for something very basic. Yeah, I mean, if it finds, here's a good one, Frank. If we find the 200 EMA on the Russell, I'll probably get some credit spreads and look for another push up. So that might be my nearest term trade rather than waiting for a strangle or something on the Dow. If the Russell melts down to the 200, I'm going to do some credit spreads and trade, 45 to 60 days out and try to grab some profit. So that's another little index trade. I like that one. That's
I would look at that as well.
Yep. So, all right. We can always find something. Okay, cool. Anything else for you today, man?
Nope, not today. Tomorrow I'll probably be looking at more credit spreads.
Okay.
I'd imagine it wouldn't be a heavy news day. We just have unemployment claims.
Yep. So, all right, man. That sounds good. Let's connect offline if you want to. I know I had some stuff to share with you, but anyway, if it works, it works. Otherwise, I'll see you tomorrow.
Okay.
All right.
Thank you.
Thanks, everybody. Have a good day. See you soon.
See ya.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.